when you buy term insurance, there are really four decisions you have to take. The first is how much sum assured to opt for. The second is which insurer to select. The third is how to actually buy that insurance. And the fourth is what information should you declare to the insurers. Let's take each of these one by one. The first one, which is how much sum assured to buy, I think that is relatively straightforward. There are many complicated and scientific ways of going about this. I just suggest a very simple approach, which is aim for 10 times your current annual income. This 10 is not a magic number, but basically, if something were to happen to you today, from experience, we know that it would take 10 years for the family to be financially stable. So, if you're already financially stable, you need to have less insurance. If you're more vulnerable with a lot of dependence, you need to have more than 10 times of cover. But 10 times your current annual income is a very good starting point. The second question is which insurer to select. Now, you should pick life insurers who have three things: high claim settlement rates, high persistency, and few complaints. All of these three things are available in the insurer's own public disclosures. This is on their website. If you go to the website and look at the bottom, you'll find sort of public disclosures. You can go through those. They're also available in the regulator annual report, the IRDA's annual report on the regulator's website. So you can really take a look at this. You can also depend upon fact-based rankings like what is done by the Fortune magazine, because those really take these very parameters and make an analysis. The third question is the how to buy. And when I say how to buy, it means that should you go and buy with the help of an intermediary? The intermediary could be a broker who works with multiple insurers. It could be an agent who represents one or two insurers. Or should you go and buy directly from the insurance company, either by calling up the sales team or by going to their website and leaving an inquiry there? Both options have advantages. When you buy through an intermediary, what really happens is that the intermediary will guide you through the process of insurer selection, the documentation requirements, the medical tests. If you have some complications, some medical conditions, they can tell you which insurer is more likely to give you an insurance, at what sum assured, etc. So they're really a very good sounding board for you. And if there were ever a claim, the intermediary will actually help your family do the paperwork and get you the money fast. What intermediaries also do is that every few years they will look at your term plan and tell you whether it's adequate or not, because your income may have gone up, so your sum assured needs to go up, or there may be better products in the market. So a good intermediary will do that. Those are the advantages of an intermediary. There's some advantages of going direct as well. One advantage is that some insurers will give a small discount. Now that amount of the discount varies, but typically it will be 10% or less if you buy directly from them. That's the sort of option. It's a viable option for someone who is very comfortable and confident about doing all the research themselves and going through the financial, financial products, and they've done that before. I think it's a okay option. Sometimes this is called a zero cost option. That's not the case, because the effort of comparing insurance companies or sort of doing the paperwork has to be done by someone. Either you do it yourself or you have an intermediary do it. Ultimately, what I think is that, one should not spend too much time deciding whether you want to buy through an intermediary or whether you want to buy directly. For me, the more important thing is to just go and buy the term insurance and not to procrastinate or delay this purchase too much. As we all grow older, we will develop medical issues, sometimes hypertension, sometimes diabetes, thyroid related. These are just some of the more common issues. And when you develop these conditions, it's difficult and certainly more expensive to buy term insurance. So I would say just buy what you can when you're healthy, move fast. Don't think too much about the method on which you want to buy it. Just make sure you're buying from the right set of insurers like we discussed and the right sum assured, and get going. The fourth question is how much information to disclose or share with the insurer. And this comes up when you fill up the proposal form, because in the proposal form, what will happen is that you'll be asked a whole bunch of medical and financial questions. I think the good practice is that you should declare what is asked for and nothing more. So if you have to give a detail of medication which you take, give that very accurately. If they ask you whether you've had any surgery in the past 2 years, 3 years, just give that very accurately. Don't volunteer additional information unnecessarily, because sometimes it can just put your proposal form in a toss. but you have to be accurate and you have to give all facts as they've asked for in the form. You follow these 4 steps and you'll end up with a fabulous insurance. Once you have your term insurance, actually, you should not even worry so much about, uh, like basically because of the regulatory changes, all term insurances are good and have a similar set of policy wordings. So you even you can't make a drastically wrong mistake when you buy term insurance. There's some other good practices that you must definitely think about. The first is declare a beneficial nominee. This is one of your legal heirs who will get the money if you die. And you can say you can have percentages. You can say this person will get 100% or 50% or whatever. And this is a very important step because it makes sure the correct person gets the money. If you don't declare a beneficial nominee, then what will happen is that the money, the benefit which is paid, will be distributed amongst all your legal heirs. And that may be something which you're fine with, that may be something which you don't want. So just take a conscious decision on the beneficial nominee. Do not forget to renew your policy. I can't overemphasize this. If there's a break in your policy and your the insurers will ask you for a declaration of good health. If your health condition has worsened, you will find yourself in a situation where the insurer will either raise the premium or not renew your insurance. You don't want to be in that situation. So whatever method you're comfortable with, whether it's setting up an auto reminder or a auto debit or putting it in your calendar or having an agent tell you, make sure you renew your policy well in time. Once you get the policy, do keep it in a place where your family can find it. It could be physically in a drawer or cupboard. I have all my documents lying in a cupboard, or it could be using one of the e-insurance accounts. I use DigiLocker for my insurances, so that if something were to happen to you, people can track down the documents that you have, and it makes their life much simpler. I had this situation once where somebody came to me and said that somebody had died, and the family came to me and said that, look, we don't know if he had any insurance. And unfortunately, I could not answer that question because there's no way I can go to 30 life insurers with no information except just a name and say, can you tell me whether this person had a policy? It's just not practically feasible. So make sure your family has the policy, and that's how it is. So, that's really what I had to say. I think the first the first insurance you must buy, the first life insurance you must buy is a term insurance. That is by far the most important thing for you. And following these 4 steps that I told you and keeping in mind some of these important points, you'll end up with an excellent insurance.